Hello everyone, this is Dan Gramza, and welcome to Gramza Market Studies for Tuesday, February 26th. Let's start with that Nasdaq market. And one of the things I said yesterday for Monday's action, I was looking for a relatively quiet day. Well, we didn't have a quiet day across the board in many markets. Actually, we had some volatility. A lot of it stems from Europe in terms of what's happening in Italy, as we talked about in the advanced video. But let's take a look at what happened here in the Nasdaq market. And are we looking for a dramatic follow through? The markets absorb the news. I am not. So I'm not looking for a big day down in the Nasdaq market. I feel the same way about the euro. Again, the euro took it on the chin. We're going to get more information about that election, and that's going to have an impact here. One of the things I'm often asked about are these red and green lines, and just to give you a feel for what this represents. And again, I'm not trying to say that you should be doing this or that this is the kind of return you could get. But as this market traded back up above that green line, the difference between the previous red line and that green line is 55 ticks. And each tick is worth $12.50 for the Swissy. For Mr. Yen, the difference here between that red line and this green line that you see here is 1,005 ticks. Now, I'm usually asked about this, and again, each tick, which is the smallest increment this can move, is $12.50 for the yen. And it would be 1,005 times $12.50, or the magnitude of change here would be $12,562.50. And again, I'm only giving you that as a reference to give you a feel for this magnitude of change. Also, there's something else you want to keep in mind. Now, I'm talking to you about a full-size contract. The CME has also created a micro contract, which is 1/10 the value. So the chart looks the same, nothing changes there, but the value of this change will be 1/10 of the value that I mentioned. So it'll be $1,256.25. So it'll be 1/10 that size. So it's another way for someone to begin trading the currencies to do that as an alternative as opposed to the full-size contracts. All right, well, let's move on here. Oh, and the British pound, this difference here in that market was 165 ticks. Would be the difference in value there. Now each tick there is $6.25, and it trades in 2-tick increments also, which would be $12.50. All right, let's move on though. So we're looking for an unchanged type day. I'm not looking for a big move down on those currencies. Obviously, when we have risk in the equity side of the market, we see capital flowing towards interest rates. That's what you're seeing here. I am not looking for a big day to the upside in the notes. I'm looking for a rest day. I am looking for buyers to continue to come back in when it comes to the precious metals. Now in gold, the difference between this red line and green line there, and again, this is only a reference. It doesn't really mean anything other than to give you a feel for how this market's changing. That is $38. Now each full dollar in the gold market is $100. So that would be 100 times 38, or $3,800 would be the dollar value of that change for a full-size contract in gold. But there's different sizes of contracts that you can trade. There's smaller sizes as well. So it's something you want to be sensitive to if you're looking to trade that type of market. In silver, this difference here between the red line and the green line in that market is $1.67. That market trades in 0.005 increments, and that's called a tick, and that's $25. Or we can say each 10 cents is $50. But this dollar value of change for that market, for the full-size contract, would be $8,350. And again, that just gives you a rough feel for how this market moved. Now let's take a look at copper. Copper also traded through that red line, green line, and the difference here between these two actually is 12 cents, and each full penny is $500. So this difference here is $3,000 a contract. Also notice that the market did trade above that, but it failed as the market traded back down. So again, that's just to give you a reference of how these markets have unfolded, and I'm not looking for a down move in those markets. I'm looking for buyers to continue to the upside. Crude oil really depends on the dollar in terms of what it's going to do. Weaker dollar, we're going to see this market moving up. Stronger dollar, we're going to see it moving down. We've had some weather conditions change in the United States and also in Argentina, and we're seeing the impact on the grain market. Right here for soybeans, we're looking for some continued downward pressure in that market, so we're looking for this to back off, but not in a dramatic move for today's action. And also, this is a market that has mini contracts. For example, this difference in soybeans between this green line and this red line, that difference is 11 cents. Each full penny in that market is $50. Now, there's also a mini contract that you could trade if you're starting to look at the grains. That may be an alternative that you might want to consider. Well, that concludes today's market studies. Thank you for joining me. Look forward to being with you again. And in the meantime, take care.